Well, I think the oil markets, while it's subject to sentiment a lot, I think it will come back to fundamentals of demand, supply and demand. It does look like demand is starting to come off a bit. 1.3 million barrel a day growth, maybe now in 2019. We were thinking 1.5 before, so there's some changes there. What happens with global economic growth in the end always drives the oil price through the cycles. United States and Saudi Arabia, I don't think the relationship is deteriorating. I just don't.
In spite of what we've seen with Jamal Khashoggi?
I don't think so. Well, obviously that's a grave concern for lots of countries and lots of places. But the fundamental relationship with Saudi Arabia and the U.S., I believe, is quite firm.
Firm with the administration at the moment, but of course the Democrats have just taken over the House as well, and there's going to be a lot more inquisition over a lot of issues regarding the administration as well. Do you think the appetite, either from the administration or from elsewhere on Capitol Hill, for NOPEC legislation, i.e. looking at OPEC as a cartel and as a distortion against US consumers and US economy, do you think that's got legs at all, Bob?
Well, I actually hope not. I mean, that would be something that would, quite frankly, change the global dynamics of global trade and global oil flows, and potentially even the U.S. oil and gas industry that's so dynamic right now. So I hope that doesn't. I think that's quite, I'm going to say it, I think that would be quite a narrow-minded thing to have happen, so I hope that doesn't.
Why would it affect the US production? Because your stake in US production has just gone up again, of course, the BHP shale assets as well. You've got high expectations, and I was looking at a piece from Bernstein this morning about you, just came out this morning, saying the importance of your free cash flow coming from your upstream operations, including the shale assets. It's very important that you hit those $14–15 billion targets by 2021 as well.
Right.
So how could those shale dynamics change on the back of the geopolitics?
14 to 15 in the upstream, 15 to 17 as a company, so we've got a little bit greater capital budgets. Well, we're focusing right now on the Eagle Ford, which is unconstrained really, whereas the Permian is more constrained, so that's going to be another wave of investment. So it's not going to come in the order I think some people are saying. We're very happy about those investments in the BHP assets. They're very high quality, great people. I don't see it throwing us off course. We're still planning the company longer term on 55 real oil prices. We haven't set the price for setting a budget next year for 19, but we're not going to be overly aggressive. We're going to remain conservative, capital and spending and plans, and I think that's the right thing.
And I have to ask you, given what we've seen with the U.S. midterms, we've seen more of the Democrats coming in. We're going to see at least more of a push on Capitol Hill to renewables, to working with the EPA more closely in terms of what's going to happen next within the climate change dynamic and argument. Where does that leave BP? Because you're heavily involved there.
We're very heavily involved in renewables. We have a very large wind business in the United States, a very large biofuels business in Brazil, and now we're in a very large solar development company. So
does that mean more opportunities for you?
I think it means more opportunities. I think the reality is the world's going to need all forms of energy. Natural gas, we've got to get really clear on making sure methane leakage doesn't happen, or methane leakage, because that's a cleaner burning fuel that I think is going to be, the future is probably a combination of natural gas and renewables down the road with oil for transportation.
Just on that, talking to Michele Della Vigna from Goldman Sachs last week, I don't know if you saw the piece, reimagining big oil. You're in there as well, Bob, as well. He said to me last week he thought there would be a spike in prices before we saw the right investment mix and scenario going forward as well. Do you see another spike coming?
Well, if investment doesn't continue, and if world economic growth rates continue like they are, even though they're coming down a little bit, there has to be enough investment to keep up with it. So, as always happens in the world of oil, it's the pace of the supply getting to the market at the right time, and I don't think that if OPEC hadn't increased their production levels this year, I do think we would have been over $100 a barrel. So, as long as the investment keeps up with legislation, clean energy will grow fantastically going forward. It's going to take a mix of all things.